Hey, Bulls and Bears, it is Thursday, March 10th, 2022. Thank you for being here. As usual, we've got a ton of economic financial news to get caught up on. Um, Debt, and debt is very big now. Debt is at all-time highs, not just very big, all-time high debt. What had to be done was banks had to be completely unleashed from regulations and allowed to loan out endless amounts of money. As most of you know, there's no reserve requirement right now for the banks. So what's being done is new ways of getting people deeper and deeper into debt and new financing, new types of financing, and longer financing. Take a look at this article right here. Not actually an article, I'm sorry. It's a flyer I received in the mail. This is called Ashley Furniture. And you can finance for 77 months, right? So 6 years is 72 months. We see that pretty typical now with most car loans. A lot of them are 72 months. Not about most, maybe not most, but a lot of car loans are 72 months. 77 months for furniture. They want you to finance a recliner or a couch for over 6 years. By the time that sucker's paid off, you're lucky to have any couch to sit on. It's probably going to be all torn up. At least my couch is like that. We had ours for about 7 years now, and it's looking pretty ragged. You know, we've got kids that climb all over them, and we've got a couple pet rabbits that they're not nice to the furniture a lot of times. But yeah, isn't that crazy? 77 months to finance furniture, more than some car loans, right? A lot of car loans are still 5 years. So that's just one example, and I wouldn't be surprised if we saw the 40-year mortgage come out if home prices keep going up, which it looks like they're going to keep going up. But there's this back and forth, not a back and forth, there's these forces that are contradicting each other, or forces that are going against each other. We have inflationary forces, we have deflationary forces. Mostly, the forces that we're seeing now are mostly inflationary. We're talking about the shortages, the supply chain crunch, the rising energy costs, all inflationary. The money printing, all inflationary. Deflationary, not so much, except a couple things. Let's talk about mortgage rates. Mortgage rates are on the rise, over 4% for the typical 30-year mortgage. All right, now that is typically deflationary. Rising mortgage rates are typically deflationary. But this rise that we've seen is not deflationary enough to outweigh the inflationary measures with all the shortages and the other inflationary measures. Do you understand what I'm saying? So even though we're having higher mortgage rates, and I know some people have predicted a housing market crash because of this, it's not going to happen. Mortgage rates need to go to 6, 7, 8% in order to offset the other inflationary pressures. And we're also talking about another thing we have to add into the inflationary pressure is the institutional buying. Institutions, corporations, big investors are coming in at unprecedented levels and buying up real estate. That's another inflationary pressure. So yes, inflationary forces by far exceed the deflationary forces, example, mortgage rates. All right, but let's take a quick look at what's happening with the mortgage rates. And we'll just look at a 1-year chart here, and we see that we're coming in at about 3.85. And if you look compared to just a year ago, we're a full percentage higher than what we were at the beginning of March 2021. Now that was expected because we see the Treasury yield, the 10-year, is back up over 2%. So we're going to continue to watch these rising mortgage rates. Will it be enough to offset the inflationary? It's very unlikely that it's going to be enough to offset all of the other inflationary forces. Another inflationary force is all of the destruction of homes with all this severe weather, and it's been getting worse each year. We're looking for another bad fire season out here out west. We see fires now also, last year started very heavy up in Oregon, so it's not just California. And in some areas, homes are being destroyed faster than they're being built. And that's another inflationary force. So anyone looking for a crash or deflation within these markets, including the housing market, you're likely going to be waiting a long time. So prepare accordingly. And I'm not telling anyone to go rush out and buy a home because home prices are only going to go up. I'm not telling anyone that because your financial situation may not grant doing that. Maybe you won't be able to handle the carrying cost of the taxes, the insurance, the maintenance, everything that goes along with the owning a home. So make your own decisions, do your own due diligence and research. But it's looking to me like prices are going to continue to go up for a long, long time. Now, transitioning a little bit here, we did see a pullback in oil today, down under 108 per barrel. We'll see if that translates into lower gas prices. I really hope so. As I predicted, though, this did pull back. On the way up, typically you do see pullbacks. It doesn't mean it's not going to go higher, but today we did see some relief. I expect it to continue to go up, though, in the weeks and months to come. 150 per barrel plus. Even higher, at some point this year. Now, in this environment, there has been a lot of talk of recession. Of course, the way recessions are defined, it's GDP, and GDP can remain looking pretty good if you send out enough stimulus checks, and if enough people swipe credit cards and go into debt, you can avoid a recession, technically. But in the past, surging gas prices have triggered or have coincided with recessions. It doesn't mean it's going to happen like that this time, but let's take a look at what happened last time we saw this type of spike in gas prices. All right, and this chart is out of Real Investment Advice. We do see the oil price back in 2008 spiked close to 140, about 135 per barrel. And what's going to happen this time? Will this trigger a recession? Will a recession happen at the same time for other reasons? Well, actually, no, I don't think so. I think the money printing is going to mask over this recession. But remember, we've got a lot bigger problems to worry about than a recession. This is going to be an inflationary depression. That's what I see, an inflationary depression. So markets will be propped up, prices continue to rise, the bubbles get bigger, but your purchasing power goes down because it's not keeping up with the rising cost, not keeping up with the rising cost of living. So inflationary depression is what I see on the horizon. I think we're just in the early innings of this right now. Now let's talk about opportunity within chaos, or an opportunity within this market and this economy. With the high fuel prices, you are starting to see some people choosing to sell larger vehicles, including RVs and motorhomes. So maybe you could find a good deal on larger vehicles. Hopefully you'll get a diesel at a good price if you're looking around. We still have this surge in demand for vehicles because of all the shortages with the supply side and the chip shortage, etc. Now, some people say that the chip shortage is manufactured or being done on purpose. I've gotten some messages saying there's a warehouse full of chips and that they're just keeping these off the market to try to keep prices elevated. Either way, vehicle prices are still surging. It doesn't matter what your belief is or the reasons behind it. But with the surging fuel prices, hopefully we'll start to see some more larger vehicles come on the market. It may be a good time now to find better deals on these RVs and larger vehicles that people are shying away from or even selling because of the fear of filling up the tanks in those larger vehicles. So maybe you can use this as a buying opportunity for some of those larger vehicles. Just keep an eye out if that's something that you're looking for. And, try to do the best you can in this situation. Hope everybody's good. We're going to wrap this one up. Peace, big love. Bye for now, everybody. Keep stacking, keep preparing. Peace.